Your recording's on.
Okay, I'll start letting people know. Okay.
Great. It looks like you're all being admitted into the webinar, and thank you. We're just getting the recording started. We'll just give it another couple of seconds just to bring more people into the virtual room. So the numbers are going up. Thank you very much. And then we will keep attending. So just to let you know that this webinar will be recorded for you all, and it will be sent out as a follow-up at the end of the webinar. We do have a Q&A, so we are asking you to use the chat function that from any bits of information that you're picking up in the presentation tonight, other than some of the pre-submitted questions that have already been supplied from some of you on this call. If there is anything in particular that you would like to hear from us, please put it in the chat and I will hopefully have time at the end. If we run out of time and unable to answer all your questions, these will be followed up with you. So please bear with us as well. So welcome to the Rettie Financial Services, where we're looking in the particular market space of the first-time buyer, where we're looking to give you the advice and tips of how we get you mortgage ready. My name is Neil Cunningham. I'm the Commercial Director here at Rettie & Co, and I'm looking forward to being your host as I take you through this webinar. So no wonder of what we read currently today in our press. There is a lot of reasons why some of you thinking about coming onto the property ladder, why would you? But one of the things that I can say to you that in amongst the economic climate or market that we're in today, you are integral to making sure the property market moves forward. So I'm very lucky to bring to you today an agenda which is going to show you how we can encourage you to remain positive as you look to embark on your property journey. So I'm going to be introducing you to Bob Duncan, who is our Managing Director at Financial Services here at Rettie, and he is going to take you through everything of how you assess your financial needs and then what are your top tips for first-time buyers. We're very lucky that we have two people that have taken their time out of their busy day jobs. So from Aisha Thompson from Skipton Building Society is going to take you through some of the products that they've got available for first-time buyers alongside Nationwide. So we keep it within the competitors with Donald McVicker that will do the same of what Nationwide has for you as well. I will then pause and I'll bring you all back together. So the speakers that you have today, where they will go through some of the questions that you have submitted and then some of the questions that you may have put in our chat function as well. So let's move forward and I'll introduce you to Bob Duncan, our Managing Director, who will take you through the financial services with first-time buyers. Bob.
Thank you very much, Neil, and good evening to everybody that's joined us, and thank you for taking your time out. It's obviously quite an important subject based on the number of people that have joined us this evening. I think what we'll do is we'll get started with assessing your financial readiness. The very first thing anybody should do before they start house hunting is to get a copy of your credit report. Have a little look through that, make sure that everything is accurate. Is there anything in there that causes you concerns? And start to do a bit of research if there is. Next, you want to try and build a bit of a budget. And the best way to do that is start by looking at your income and outgoings and then bringing your savings in to determine a realistic budget for that property purchase. In Scotland, you'll also need to consider bidding over the home report. So again, just kind of trying to bring that to life for you. Now, to really give that a bit of life, you want to calculate your affordability. There are loads of online calculators that will allow you to look at how much you can borrow. But more importantly, and probably in the current climate, it's what those mortgage payments look like every month is key for you to look at. Also, you'll need to consider additional costs as part of the home buying process. These could be, as an example, your land, buildings and transaction tax in Scotland, stamp duty for England and Wales, your legal fees and potential valuation and survey costs are some of the things that you will need to consider. The next thing is getting mortgage ready. And the very first part of that, once you've kind of done a bit of a kind of a bit of research yourself is to get yourself a decision in principle. You may have heard it's called an agreement in principle, but the reality is it's the same thing. This is a credit inquiry against you or as a couple, and this is normally what we call a soft credit search, and it's to confirm your maximum borrowing. What it's also going to give you an idea of is how much of a deposit is going to be required. Now, when you do that, it is going to be subject to the lender that you're looking at, predominantly, more than likely, your bank. The next thing I'd encourage you to do is to look at the mortgage products and options available in the UK marketplace. So how does a fixed rate mortgage work? What do they do? What are the pros? What are the cons? Also, what are variable rate mortgage products out there, and how do they work for you? Have a little look at the help to buy schemes, the list schemes. Now, Aisha was going to touch on the list scheme later on, but there are lots of other options out there that might support you as a first-time buyer. Other things to consider are factors that might affect your mortgage rate. So if we think back to looking at our credit report, what if we do have a small blip on there? The chances are that will impact your number of lenders available to you, and it could impact the interest rate as well. Deposit is the next thing to consider. So the smaller the deposit that you have, the bigger the rate of interest that you're going to have. However, if you're able to put down a little bit more, that interest rate will come down and be more beneficial to you. Think about the market conditions and what's happening at the moment. We've come through a bit of uncertainty, and I feel that we're probably starting to stabilize, but think about where you plan to be in the next 2, 3, or 5 years. And once you've kind of done that sort of base research, that agreement in principle or decision in principle is the most important piece of the jigsaw, because that's going to give you a real clear idea of how much you can borrow. And when you start looking at properties, you can start to visualize yourself in the home, but more importantly, what do those mortgage payments look like? Next part of that process is making the offer, or the sort of buying process. Now, part of this is you're going to need a solicitor or a conveyancer who's going to do the negotiating on your behalf. Now, they will be able to take guidance from you, and they will give you a bit of an understanding of what's happening in the marketplace and specifically the property you're looking at. But ultimately, they're going to take your views, your thoughts, and place an offer based on what you want to do. Now, let's assume that you get that all-important great call from the solicitor that your offer's been accepted. The next thing to do is to go back to your bank or a broker, if you have one, to get your mortgage application submitted. Now, to do that, you will need a number of things. You're going to need some paperwork, which will be your income, your outgoings, maybe proof of ID, proof of address, but also you're going to need to know the property value, the home report, the purchase price, to be able to provide that to the bank so they can submit your mortgage application. Now, once that has been started and that process is underway, the solicitor will then only step into the transaction again to handle the legal paperwork once the mortgage offer has come out. Now, what that really means in very simple terms is they set up the security and the title deeds for the bank who's giving you the loan. They'll also carry out any of the required property searches to ensure that a smooth buying process is then followed. Once everything is agreed and they're happy and the security is set up, it will then move to what's called exchange of contracts for England and Wales, or the conclusion of the missives in Scotland. Again, really in simple terms, that's the day that you're going to be picking up the keys to your brand new home, and that's the one that you really want to focus on. Now, thinking of everything that you've gone through, that seems like quite a lot to manage and sort of look after, and that is where the benefits of getting mortgage advice can really come into play. If we think back to that very first slide, which was what happens if I do have a bit of adverse credit there? What if I missed a payment to my mobile phone once? This is where a broker can really add some value to you. They will be able to look at it and provide you guidance on what you need to do to be able to help you secure a mortgage within the UK market. Now, a mortgage broker will also help you get an agreement in principle, but the difference here is they're going to base it on what your plans are. Are you looking at the best rate in the marketplace? Are you looking for the maximum borrowing? Is it even a new build property? Or maybe some of the properties you're looking at are what we call non-standard, which are above commercial. And all of these things will impact the lender that they're looking at for you, along with your own personal and financial situation. And they're able to do this across the UK market for you, meaning that when you go to view properties, you're confident that you've got the right agreement in principle in place behind you. Now, the big thing here is mortgage brokers offer advice across the UK market, whereas your bank, which predominantly most of us will go to, are tied to one set of mortgage products and not necessarily the best products in the marketplace, which is why a broker is going out there to do some research for you. A really good thing that most brokers will do for you is they will bring that budget to life for you. Most of the mortgage systems they use are live systems, which means that they can produce mortgage illustrations based on any property that you're viewing. And they can update this as many times as you need. Once they've got that, they will then be able to start looking at home reports with you and then give you some guidance on what you should be looking for within the home report, maybe some questions to ask the sellers or even to put towards the selling agent. Now, most brokers are experts in their core areas and will be able to give you some guidance around about submitting an offer. And by giving you an example of how those mortgage payments are likely to be affected, should you need to use some of your deposit, certainly in Scotland, to go over the home report. So what's the impact on the interest rate? What does that then do to the mortgage payment? And what that really is doing for you is giving you the confidence that when you're going to submit an offer, you know what it looks like before that happens. Now, by having these conversations, and there will be more than one of them with your mortgage broker, it's going to put you in a really great place when it comes to submitting an offer. More importantly for you, there's not going to be any shocks around the rates or the mortgage payments because you're going to have been in regular contact right throughout the property journey. Now, upon getting that good news call from that your offer has been accepted, your broker will normally have you booked in within less than 24 hours. And that will be to run through the specifics of that mortgage product, making sure that it's everything that you wanted it to be. From there, they're going to get your application fully submitted and sent off to the lender. And because the broker is working for you and not the lender, from a document perspective, you already know what you need to send over to your mortgage broker. And what they'll do is they'll then get all of that information submitted to the lender at the same time your mortgage application is submitted. What that means is that your mortgage application is going to move quickly and smoothly through the underwriting process and will significantly help reduce the time your mortgage application is actually underwritten. Now, as they work for you, they will deal with the mortgage lender on your behalf. And really importantly here, they will provide you with regular updates right throughout the mortgage application. So none of this having to sit on the phone waiting for an hour to speak to somebody, only to be told there's no update. Your mortgage broker and their admin are going to be able to do that for you and provide you the updates right throughout the process. Now, once that mortgage offer has been released, they will be in touch with you straight away to let you know what the next steps look like, and they will then liaise with your solicitor to make sure that they have everything they need to conclude the missive or exchange on the contract. The key thing here is you've got a single point of contact, and that is going to be normally an email or a phone number. So you're always there to pick up the phone to them or drop them an email, and they will be there for you right throughout the journey. Now, what's really key here is they are here with you throughout the journey. So it doesn't matter if you're a first-time buyer or a home mover, they're going to take their time and go right throughout that journey with you from the day of that initial conversation right through till you get your offer accepted. The next part of the process, or the next part of the jigsaw, is a sort of mortgage affordability here. And what I thought would be really useful is to give you an example of our typical customer. We've got Brian and Jenny here, who are both first-time buyers. Now, Brian banks with the Halifax and Jenny banks with NatWest. They have a combined income of around about £42,000. Brian has a small credit card with a balance of about £1,500. And Jenny has a student loan, which is about £30 a month. And they've seen a property with a value of £200,000. Ideally, they're looking for a mortgage over 30 years. They've got no financial dependence. And they've got around about £32,000 in savings, which they want to use as part of their deposit, legal costs, but also to buy furniture and cover all those initial move-in fees that come along with it. Now, what I would like to do is to put a poll up on the screen, and what I'd like you to think about is, do you think Brian and Jenny going to their own banks would provide them with the maximum amount of borrowing in their situation? Give you a couple of minutes just to kind of have a little think about that and submit your answers, and then we'll have a little look at the outcome of the poll. Some interesting changes here. Numbers are going up and down quite frequently. And it looks like most people have now responded. And interestingly, we've got 42% of people think that they would provide them the maximum borrowing, and 52% saying currently no. And those that said no, you're absolutely spot on. If we look at this list here, we've done a full affordability on these customers. And what we found is that the nationwide actually provided the maximum borrowing at 188,600. And then we had the Skipton, Bank of Ireland, Newcastle and Accord all coming in second, just slightly below £188,580. Now, interestingly, we've got NatWest and Halifax further down the list. Now, if we take Halifax as an example, they actually came 15th out of all of the lenders that we looked at, with NatWest coming in at 6th. And what that tells us is that, yes, you might have a banking relationship, but actually, by going out to the UK market, you've got a better chance of securing the maximum borrowing, but also having a broker working with you means that you've got the better chance of getting the best rate available based on your personal and financial situation. What I'd like to do is just pass it back to Neil. Back to yourself, Neil.
Bob, thank you very much. I feel a little bit sorry for Aisha and Skipton being £20 away on the affordability. And actually, the poll for me is very interesting. And it would be good, Bob, maybe later on in the webinar to cover off of how does a first-time buyer become aware of a broker where normally they'd be sitting on the sofa looking at their own banking app and maybe presenting themselves thinking that their own bank has their knowledge and would be the best lender. So that's been a very interesting poll for me. I thought it would have gone the other way round. So if you can part that, Bob, for me would be great. So Aisha, I'm going to be handing over to you as well. So welcome, the Business Development Manager for Scotland for Skipton Building Society, and Aisha is going to take you through what products are currently available for first-time buyers. So Aisha.
Thanks, Neil, and thank you for having me on this evening. Hi, everybody. So from a Skipton perspective, there's a couple of things that I would like to touch on this evening. The first is looking at how we can support you guys that are currently renting property and taking that first step onto the property ladder. So you probably will have seen this in the news and in the market. We launched the first 100% loan to value, the 100% mortgage earlier this year. Now I have this slide at the start, and this image I think is actually really powerful because it brings to life how long on average it will take you to save for a deposit depending on where you currently live. So in Scotland, as you can see, we're a little over 6 years. Now that's quite a chunky period of time to be saving for a deposit, and what we're looking to do is effectively cut that down to nothing to support applicants that have been renting for a minimum of 12 months onto the property ladder. So the track record product is a very unique product in the market, and we'll start to have a look at what that looks like in terms of criteria and what you need to meet. So this product is, as I said, available to anybody with no deposit. So no deposit at all, we can still look at you under the track record products. It is designed for first-time buyers in mind to support you onto that property ladder, but we will class anybody for this product alone who's not owned for the last 3 years to qualify as a first-time buyer for the track record lending. As you can see on screen here, it is our ambition at Skipton to unlock 50,000 homes for 80,000 first-time buyers. So first-time buyers is a really key part of our focus and driver to support as many of you as possible onto the property ladder. Moving away from the track record policy and just looking at policy in general at Skipton Building Society and how we can help you. If you have a pay rise, if you're currently employed and you know that you're going to get a pay rise and you can get a letter from your employer, we will take that pay rise and we will work off that income for you, even though you maybe don't have it just yet on your payslip. If you're moving employers, there are some instances where we can work off a copy of that contract rather than wait for you to start with your new employer or wait for that first payslip as well. So again, kind of thinking about moving at speeds to support you in your journey of getting onto the property ladder. We are seeing a lot of inquiries just now where applicants are working a couple of jobs side by side. So as long as we have a track record of this, we can look at both sources of income and take both for affordability purposes to support that maximum loan size. If you are self-employed, we need 2 years figures, 2 years finalised figures. And if you are a limited company director, we will add the tax back into those dividends that you take. So again, quite a niche policy point for Skipton, but something that will support you in getting a good loan size to move on to the property ladder. If you find yourself employed as a contractor, a 0 hours worker, or under an agency scheme, again, those are sometimes more niche types of employment, but Skipton can certainly support with them. And I'd say something definitely to have that conversation with your broker on. So Bob touched on the lift scheme at the start there. So I wanted to kind of expand on lift scheme and our offering at Skipton. So the lift scheme is only available in Scotland. Now, to qualify for lift scheme, there is a separate part that you do via lift, and they will grant you an equity loan between 10 and 40%. Now, at Skipton, we are again quite niche in trying to support you onto property ladder as a first-time buyer. So we do not need you to come to us with a deposit for this type of scheme. We will use the equity loan from the government effectively as the deposit, and we will do this on all second-hand houses. So as long as it's not a new build house and it's a standard house, we will support on that type of property. And then moving on again, so I have another slide here on criteria highlights for joint borrower, sole proprietor, thinking again about different ways that you can get onto the property ladder. Joint borrower, sole proprietor, is the difference there between being on the mortgage and being on the title deeds. We can have usually mum and dad going on to support you as a first-time buyer onto that property ladder and using their income as effectively as a boost there. But we do not need you to be related to that joint borrower. So we can have friends going on for friends, employers going on for employees, and we're quite comfortable with that. And we'll do this up to 95% loan to value. So we will only be asking or looking for a 5% deposit to progress with that type of case. And finally, I have family discounted purchases or a landlord to tenant purchase. So if you are purchasing from a family member, or if you're currently renting and your landlord is looking to sell, if they are selling at a discount, we will use that discount as your deposit. So again, another way that you can get onto that property ladder without actually having to have your own fully self-saved deposit. So thank you for having me on this evening, and I'll pass back to Neil.
Aisha, that is great to hear. Great to see a number of products where I think a lot of you on this webinar could need some guidance just to see which one fits for you. The one that is very, very interesting is what we can see as a business is landlords that are considering leaving the investment space with tenants having an option to purchase. I think that's a very, very clever move that you've done in Skipton. I'm sure Nationwide have probably got something similar, but because I'm sure there will be some tenants on this call thinking about potential purchase. So I think that is a very interesting product that you've just announced there, Aisha, as well. So I'm now going to hand you over to Donald. There is no competition between both building societies. I believe they're both friends in real life. So over to Donald, who is the Business Development Manager for Scotland for Nationwide. So Donald, over to you.
Thanks very much, Neil, and thank you for inviting me along tonight, and good evening to everybody that's joined the call. So just looking to sort of guide you through some sort of criteria and products that would help you sort of get your first foot to the property ladder. So with ourselves, all first-time buyers, you qualify for a £500 cashback once you sort of complete in your mortgage. So that could come in handy, you know, maybe refurbishing the property, or in fact anything you want to use it for, that will come to you once you complete. If it's a situation where we've not been able to use the home report for the property you're buying, we will do a carry out to free valuation. So if we need the valuation, there's no cost to you doing that. Also, we have on all our fixed rate products, if you're in a position where you might be able to overpay the mortgage, you can do that a 10% overpayment allowance without incurring any penalties. If you're one of our tracker products, again, there is no limit to overpayments that we permit. We also will allow you to go up to a maximum term of 40 years, up to the 75th birthday of the eldest applicant on the application. Also, if you find that after, within your product period, you decide, I want to move, you can actually port the product you have onto your new property with Nationwide. So again, you're getting the full benefit of the product you've originally taken out. I'm now going to maybe look at a detailed affordability for you that we offer. And as Bob sort of highlighted at the start, that one of the key drivers might be, how does your affordability work to make it work best for you for your sort of dream home, the one you really want? So with ourselves, and this is specifically for first-time buyers, if you're taking a minimum 5-year product out and you're a single first-time buyer applicant and your income is £37,000 or less, or when it's a joint application and you've joint income of 55,000 or more, we will give you what we call helping hand. It's basically an enhanced affordability model purely for first-time buyers, and it's something we're keen to support wherever possible. You will see there that we don't offer this scheme for self-employed applicants, although I'm keen to highlight that we will lend to first-time buyers who are self-employed applicants. Also, just to sort of highlight some sort of specific criteria for ourselves, one there, gifted deposit. So we will consider all applications where there is a deposit. The donor or the individual providing you the deposit does not have to be a family member, can be a friend, can be distant acquaintance, but we have a scenario where if it's a family member and they want to, they can actually put a legal agreement in place between you and themselves that you repay that deposit when you sell that property. Also, again, to sort of further support sort of affordability, making the best of your circumstances, if you've got a scenario where you're either starting a new job within the next 3 months, or in fact getting a pay rise within the next 3 months, and you can verify that with either a letter from your employer or a copy of your new contract, we will actually base your affordability and application on that new income. And with ourselves, as long as it's within 3 months of your application date, you can actually move into the property before the new income comes into effect. So we've got the reassurance that yes, you're getting this future pay rise or future new job, but you can actually make plans to move into your new property before that actually fully comes into place. Also, just to sort of mention here, Neil had sort of obviously discussed about, tenant purchasing your existing property. So we have sort of 3 specific scenarios where you don't actually physically have to find your own deposit. So it could be that you're renting at the moment from a landlord, you really like the property, like where you are, it fits all your needs, ticks all the boxes, and the landlord's prepared to sell that at a discount of 10% or more. We will consider that application for you. And again, as I say, no physical deposits needed from yourself. Also, it could be that you have a family member that's looking to sell your property. It could be one that you're looking to move into, or indeed you could also be renting it, from a family member. Again, they're looking to sell that property with a discount, and we can do that. And finally, as well, that's replicated if you've got one that's provided by your employer and the employer is prepared to sell it to you. And again, if there's a 10% discount or more, you physically don't need to put in a deposit. Okay, and thanks for your time this evening, and I'll hand back to Neil.
Bob, thank you very much, and going through your products. So before I get Bob just to do the top tips for you all as first-time buyers, can I remind you, if you've got a particular question that you'd like to answer at the end of this webinar, please could you place that in the chat, or we will just stick to the supplied questions that were supplied when you were registering. So please use the chat function if you've got a particular question. So handing back to Bob, who will just take you through the tips for first-time buyers.
Excellent. Thank you very much, Neil. So a couple of things for me and I guess it's about avoiding common mistakes. The first thing is stay patient. Don't rush any decisions, and where you are using a mortgage broker, be in regular contact with them, allow them to make that property a reality in regards to what those mortgage payments look like. What's going to happen if you go over the home report value with your offer? Let them bring that to life, because that will really help you and make you feel confident when it comes to submitting that offer. Also consider the future resale value. So think about the property's long-term value. You know, why are you buying this property today? Is this a simple stepping stone? Is this your forever home? Think about the impact of the property itself. What will it look like in 2, 3, 5, or in 10 years' time? Embrace the buying process. I'm going to be totally honest, the buying process is a roller coaster with a lot of ups and a lot of downs, but trust your instincts and don't be afraid to pick up the phone to your mortgage broker. They have helped hundreds, if not thousands, of customers in your situation. And no question for me is a silly one, because I can absolutely guarantee they've been asked it hundreds of times before. Now, for those maybe not quite ready to dip their toe into the property market, or maybe considering buying a property later on this year, I would strongly suggest downloading our home buying app. It's got a great built-in affordability calculator. There's a mortgage payment calculator in there, and there's loads of information on how to maximize your savings, even including what type of savings accounts are available and what is best for you. And more importantly, it will cover everything that we've discussed today in detail. And remember, our team is here to support you at every step of the journey. Back to you, Neil.
Great, Bob. Well, listen, everybody, in front of you is a scan to book your free consultation with one of our mortgage brokers. So please, as I group Donald, Aisha and Bob together to answer some questions that you have submitted. And there's been a question that is submitted into the chat, so I'll probably use that as a second point as well. So thank you very much for supplying that question as well. So get scanning and get booking for your advice with a consultation with one of our brokers. So Donald, I'm going to come to you. I am a first-time buyer. My partner had a mortgage a couple of years ago. Can we still get a first-time buyer's product?
Thanks, Neil. Yeah, with ourselves, our criteria is that we will class you as a first-time buyer as long as you've not had a mortgage for 3 years or more. So you could effectively be living in a property that you actually own outright, but have not had a mortgage for 3 years, and we'll class you as a first-time buyer product. You'll get the first-time buyer rates and, as I said, the £500 cash back. So the key is not held a mortgage for 3 years or more, and we'll treat you as a first-time buyer.
Okay, and I think that was the same for you actually, 3 years and then considered as a first-time buyer. So that could be an industry standard. Bob, I want to reverse. The poll actually surprised me on first-time buyers actually being knowledgeable that there are specific people working in the marketplace that aren't tied to specific banks. Can you give any advice of how a first-time buyer gets aware of being in contact with a broker?
Yeah, I mean, I think, we're all guilty of trying to keep sort of life fairly simple, and probably more so when it comes to mortgages. As you said, Neil, we all have an app on our phone, and for most people, that is where they will inevitably revert to get an agreement in principle, or even to find out how much they can borrow. But the reality is, and hopefully what we've highlighted tonight, is that getting advice is key from all those little unique selling points from Nationwide and Skipton, and how a broker can really help you get into the property market. Now, most estate agents will offer these type of services, and that's a really good starting point. But for me, it's probably baked in those customer reviews. So what is the picture that's been painted by customers who've used the service? What are they saying about the service they've received from that broker? Speak to the broker, get to know them. You'll know when you've found a good broker the same way you'll know you've found the right house. It would be my advice, Neil. Okay,
brilliant. Thank you, Bob. Great. And Aisha, back to you. What are mortgage options for young adults that are under the age of 20?
So from a Skipton perspective, you can apply as young as 18. So as long as you're 18 years old, we can look at you for a mortgage. Given what I've said in terms of our offering, with the exception of the track record, the 100% loan to value product. So that is if you're over 21, but for anything else, we can look at you from as young as 18.
Great, fantastic. And a question in the chat. Now, I think, Bob, I might be able to put this back to you, but as an individual who is on a skilled worker visa that is for 5 years in the UK, can they be granted a mortgage facility of 20 years or 25 years?
Yes, they can. Depending how long they've been in the UK, most people that are here on a skilled visa would need to be in the UK for a minimum of 12 months. And once they have been here 12 months, we've got a number of UK lenders that would actually support them with a mortgage term. And the reality is actually that mortgage term could be as long as 40 years, not the 20 and 25, Neil.
Okay, fantastic. That's good to know. And Donald, I'm just going to go, I think this is a great one. Is 44 too risky for a first-time buyer situation?
Absolutely not. When you're ready, you're ready. And from a nationwide perspective, we're talking about terms there. So we would actually, situation like that, we would consider an applicant, and we would a term of up to 31 years that would take them up to their 75th birthday. So we would consider that, and standard lending terms applies. They would get the cash back and the full range of first-time buyer product options.
Great, fantastic, brilliant. And Bob, they're all coming in thick and fast. I think we've got loads of time, so I'm going to keep you all on the spot there. So, Bob, I think the next one, I think I'm always asking a lot with you as well, but with interest rates at the level that they're at currently, would it be advisable for first-time buyers to wait until the mortgages are more affordable, or should they just proceed as soon as they feel they have sufficient funds?
Really good question, certainly in today's climate. I think if we sort of break it down and we look at interest rates, first of all, I think we've all seen interest rates of sort of sub 2%. And we're now sort of seeing interest rates on average across the board around about 4.66 or higher, depending on the size of your deposit. What I think we have to remember now is that those low interest rates are now behind us. And yes, interest rates are still falling at the moment for mortgages. But should you wait? Should you hold on? I think the key thing here is it affordable? Sit down, look at the numbers. What does that mortgage payment look like? That's the most important thing. I don't think necessarily the rate has a bearing on it. You've got to decide yourself, can I afford the mortgage payment? Is it in line with my rent? If the answer is yes, and you've found the right house, and you've got the deposit, my advice would be is take that dive onto the property ladder.
Yeah, I totally agree. You will know at any moment in any market when it is the right time. You've first got to find something that you can see yourself living in, working with a broker. That can certainly help you on that journey as well. Aisha, there's a question that is considered in the chat that's come in with regards an individual that has previously owned a home abroad. They've now sold it. They've come into the UK. Would they be considered as a first-time buyer?
So unfortunately, not from a Skipton perspective, no, because you have owned property in the past, albeit overseas, we would not class you as a first-time buyer, unfortunately. But that doesn't mean to say you can't come to us for a mortgage offering, because we have lots of good products and offering for those that we wouldn't class as first-time buyers either.
And so if on the reverse of that, because the second part of that question was with this applicant's husband, they have never owned a house. So they've obviously come together, they've married, that house abroad was not was already owned by the wife. Would he be considered being a first-time buyer with Skipton or even with Nationwide if it was taken out in his name?
Yes, so if it was taken out in the husband's name and it was the mortgage purely in that husband's name as a first-time buyer, we would treat you as a first-time buyer, yes.
Okay. So there's just different ways or different angles of how you could move that as well. So it'd be fine. Bob, I've got one kind of question last back to you as well, which is with the prices of property, and this is specifically coming across into Glasgow, that they are seeing consistently that they're going 10% over home report values. How can lenders help ease the burden for the first-time buyer when they're obviously experiencing these situations?
Again, a really good question, and something we do see commonly happen in Glasgow and certain areas across the UK. Now, most lenders, as you'll probably be aware, will work off that home report value for the valuation purpose and don't take into account anything you spend over and above. That being said, there are a number of UK lenders that will look to reinstruct a valuation for you. Now, there are pros and cons to that scenario. There's also a very small pool of lenders rather than having the UK market. So anybody looking at that, I'd encourage you to speak to a broker so they can sit down, talk you through that, what that looks like and the potential outcomes of it. But there are a couple of lenders that can support those types of applications, Neil.
Great. And listen, Bob, I'm going to put you on the spot because you've told me that you would like to answer this question, so you're back in the spotlight. On deposit, so this is on questions on deposit. So from overseas, from an EU country with an income asset remit to the UK, quality for a deposit, any specific requirements that are required on AML checks?
Well, I guess the probably easiest way to answer this one is there are obviously additional checks that need to be looked at regarding any deposits. Regarding your income, that's going to be looked at by a broker. And again, when we start looking at overseas income, we do narrow our pool of lenders, not massively reduce it, but it does drop slightly. And what we tend to find is there always is a deposit requirement and a salary requirement. So it's not a no. It's one of these you kind of have to sit down and have a conversation with a broker who can then paint that picture and let you know what that looks like. But there are options available for income and deposits from overseas being used to support a mortgage application here in the UK.
Great, Bob. Thank you very much. And I think I've got time. I've not been given any warning yet that we're about to reach the maximum of what we've got here. But Donald, can I put this to you? Roughly what percentage of 1 month's income should a first-time buyer aim to have as a mortgage repayment? So what percentage are you looking at, or would you be aware to be able to answer that?
Well, we actually had recently, one of our economists, they did a presentation on something very similar, Neil, and depending on where the audience is for the answer to this question, and if we assume that it's going to be a Scotland-based audience, it was that the Scotland and the north part of England was the area where in the UK where less percentage of a first-time buyer take-home pay was required to meet mortgage payments, and it was they were kind of averaging out at about 30% of their take-home pay. As I say, that was for Scotland as a whole, and in the north of England, it was the further south you went, that percentage figure got a bit higher, and some quite eye-watering figures in certain areas further south on the map.
Yeah, great. Thank you very much. And I'm going to finish with the last question. I'm going to be Aisha, I'm really sorry. I'm not favouring Bob because I work with him as well. So I'm kind of going back to Bob with regards. Someone has said in a question that in their country of origin there are also standard variable rates that are offered to first-time buyers. Is that offered at all in the UK?
Yes, it is. I think Donald from Nationwide touched on it. We have what's called tracker products available in the UK, and these track a certain percentage above the Bank of England base rate. We also have other available products called discount products, which track banks' internal rates. And again, these are discounted. I have to be totally honest, these probably aren't as favourable at the moment as fixed rate products, and that's just because of the way that the Bank of England base rate has been creeping up constantly over the last 14 months. So what we are seeing is more people leaning towards having stability in the mortgage payment rather than the potential increase. But obviously, things can change over time, and those may become more popular once the Bank of England base rate is under control again.
Great. Bob, thank you very much. Well, listen, Donald, Bob and Aisha, thank you so much for making the time to be with us this evening. The QR code will stay on for a couple of minutes. We will do a follow-up where we've answered, or we will answer any questions that we've not managed to be able to do this evening. And then I'm looking forward to hopefully your success as you speak with one of our brokers to start that journey on the property ladder. In the background, I want to thank our great marketing team for putting this all together and making all the presenters feel comfortable and professional as we have been for you tonight. So thank you all very much. Good luck with the journey, and we'll look forward to speaking and seeing all of you soon.